Hi, morning, afternoon, night. Don't know what time you're viewing this, but my name is Shola Jani, broadcasting from out of Lagos, Nigeria, from the School of Consulting. We're looking at continuous professional development for consultants, and it's quite an auspicious time to get to do that, considering we're at the tail of the year, and essentially we're looking at projections, we're looking at planning, we're looking at basically getting ready for the year 2003. I'm so excited about what the year holds, and I'm going really prepared, full of hope, with my plans, with my goals, and all that. And that brings me to our topic. A lot of my colleagues in this space have spoken extensively around goals, goal setting, planning for the year 2023. And I'm adding my voice. I'm adding my content to that, to the body of knowledge that is out there already. Not that what's out there is not enough, but I mean, we come with different flavor, different perspectives. So that's what I bring to the table today. I'm looking at essential business essentials for 2023. I'm looking at it from 7 dimensions, and I call them the 7 P's of business. The 7 P's of business that must be in place in 2023. All right, stay with me. It's going to be fast and furious. I want to do this under 30 minutes, so that it's something that we can click latch on and put into practice. I'm going to be sharing my screen for most of the time, so bear with me if you don't see my ugly face for a while. Right, let's go over to my screen, and here we go. Yes, we're looking at business essentials for 2023. I don't know about you. Like I said earlier, I'm so excited about 2023, building on what we have achieved over the years, most especially what we achieved in 2022 is a springboard for 2023. All right, let's go. So basically, we have as our first P is our purpose. And essentially, I mean, this session is about goal setting. It's about our purpose. What exactly do you want to set out to achieve in 2023? What is your goal as a business? What is your goal as a consultant? What do you want to achieve? What precisely do you want to achieve? And I'm going to be taking a lot of reference to what we do at the School of Consulting in terms of what we have done so far, what we've done this year, and what we are doing, what we plan to do going forward. One of the key things you're going to take away from the goal setting or approach to goal setting from today's seminar is that never set goals in isolation. You set goals relative to other things. I repeat, never set goals in isolation. You set goals relative to other things. Never set goals in abeyance. You got to set goals relative to other things. In this case, I'm teaching you, or I'm teaching us today, to set goals relative to performances. So in this case, the example I'm using is, we're going to be setting goals for 2023 relative to the performances of 2022. Facts don't lie. So your goals are much more realistic if they're based on evidence, based on facts. They're anecdotal. They're not, oh, you earned 20 million this year, and you're projecting that next year we must aim 30 million. On what basis? In respect of what? And so many people go into the new year forecasting that, it's good to forecast. We're gonna do some forecasting this afternoon. It's good to forecast, but you got to forecast relative to something. So you got to focus, set your goals relative to performances. It could be historical performances, it could be year performance, but that is a more likely way of achieving your goal or your purpose if it's relative to something. You have a benchmark, you have a starting point. So what exactly do you want to achieve in 2023? As a company, what do we want to achieve? We want to achieve growth. We want to achieve growth. We want to reduce errors. We want to reduce expenditure, but much more achieve growth. So at the end of the year, we want to be able to see that we have grown, we have achieved growth. By what margin? It's very difficult to work out your margin, but I'm going to show you how do you work out margins of growth that you aspire to by the end of the year. So no more picking up margins of growth out of the year or just figures. And that's why most times your figures, you never seem to achieve those figures. Why? Because those figures were not systematically arrived at. Figuratively, oh, it's speculative. We made $10,000 this year. Let's aim for $20,000. It doesn't work that way. Okay, so there's got to be parameters. There have got to be parameters. There have got to be benchmarks in the goals that you have set. There's going to be measuring indices. So you don't wait until June to realize that you've missed your target. If you miss your target by June, there's no way you're going to achieve your goals by December. So you got to have measuring parameters almost on a monthly basis. And the reason why you have those parameters is to be able to assess your performance on a month-by-month basis. And so if there are adjustments that needs to be made, you can quickly make those adjustments in the early days, as opposed to you're waiting until December to find out if you've achieved your goal. If you don't have those parameters in place, if you don't have measuring indices, if you don't have key successful factors, if you don't have timelines that you monitor closely, timeline defined with specific goals over the year, it's very, very hard to achieve those goals. So it's critical that you have an objective. What is your objective? What's your goal for 2023? That's the starting point. Then the second thing that goes beyond that is your goals are relative to specifics, relative to events. Now, I said earlier, I'm from the School of Consulting, and I'm going to be sharing some figures with you based on what's and how we have performed in the year. Now, we have 7 products, but for the basis of this training, I'm outlining 5 products. And when we analyze our results for 2022, we realize that one major product gives us 40% of our income, almost like a Pareto principle. 20% of your problems might be coming from 20%, 80% of your problems might be coming from 20% of your friends. 80% of your income might be coming from 20% of your business. And so we realize that only one element, which is 20% of what we do, 1/5 of what we do, 20%, brings in 40% of our revenue. And then we look at other things, events, we look at training, look at consulting, we look at franchising. And so breaking this down enables you to see your business in a global perspective. Where are you doing well? Where could you do better? Where could you make savings? So it's critical that you do this relative to your projections for year 2023. I'll come back to this. And so you got to have a strategy. What's your strategy to increase growth? Our strategy is to increase growth, and I mean, growth will translate to revenue. That's our strategy for 2023. But what are the components? We've got to look at the pricing of our products. We've got to look at the numbers. We've got to look at the frequency. Say, for instance, our main product is the School of Consulting Training, which brings in 40% and is our main revenue earner. So we've got to look at it closely, that how can we increase the margins of those 40% over the next 12 months in 2023. And so we begin to look at things like when we study the pattern, we study the trends. And I'll give you an insight about the business. Come January, we've come to realize, and by studying the trends, we've come to realize that many people actually want to undertake our training. January is very aspirational. People are very aspirational in January. Oh, they're excited about the new year. They want to do new things. Oh, the course I've always wanted to do. This is about the time to do the course. And that tends to happen in January, February. So it's a good time to put together a course. We tend to have the largest number of participants in January. And so if I'm charging $1,000 in January, I could well get away with $1,001 in January. My numbers will not be affected. Why? Because the demand is there. Likewise, if I look at July, August, I mean, the numbers are down in July, August. You've got the computations here. The numbers are down in July, August. Why? Because in July, August, families are planning to be together or to go away on holidays. Yeah, I got the figures here. And so what we do is we don't schedule so much training to those periods that are downtime. Likewise, in August, children are going back to school. So for parents who are target audience, executive education, they're so much focused on, how do I pay the school fees for the children? So you've got to have that pattern. Understand the seasons in your business, and then you have products, you have services, likewise pattern along those seasons. And then we look at the numbers, we look at what we charge. So you look at that relatively. After January, the next time that we are to do our training is in April, and then the number drops. And begins to wonder why has the number dropped? Because of the rush, the early intake in February, in January, and the number drops because people are settling down into the year. There are other priorities that are coming into play. So depending on what you do, what I'm trying to get across is understand your seasons. Understand your seasons and plan your products and your pricing accordingly. Okay, so for those who may want to take our program in January, don't say it's too expensive. I'm just letting into my secrets. That is when we get the highest revenue, highest students, and so we'll take advantage of that with higher prices. Okay, so that's that. And then we look at events. We look at training. We look at other things that we do. Now, even though our revenues are, as stated, they are relative. Your revenue is relative to the cost, the expenses. There are some revenues here, even though they make up 20% of our revenue, but in terms of the profit margin, they may have lower profit margin. And so in real times, you could make more, even though it appears as if, you have sold less. For instance, our franchising, our consulting has practically zero costs, even though it's 6% of our business. So because he has zero cost of our business, we can seek to increase investment in those areas, those areas that represent your cash cow. For instance, events comes to 22% of our revenue for 2022. But guess what? On events, we made a loss of close to $5,000. And so even though it comes at 22% here, it doesn't necessarily mean it's the second greatest revenue earner. Your revenue earner is a relative function of the profit you make. Okay, so I'm just going into that so that you have an idea of how to use your revenue earner. You use your revenue earners. What are the positions? What are the products that generate the highest revenue? What are the products that has the least costs? You can invest more on products that have the least costs to produce because your revenues will increase. The marginal revenues will increase. You look at your seasons. What are the seasons that you have the highest intake? Maximize those seasons. Okay, so this can form the basis of your strategy in terms of your cost. We look at our events. Why did we make a loss in our events? Oh, we exchanged the dollar at a cheaper rate, at a lower rate than we bought the dollar. So lessons learned. So come 2023, we won't make those mistakes. So reduce your cost as you increase your income. That's how to use the relative strategy of your costing. Okay, very crucial. You can use this to set goals. So for School of Consulting that does so well, 40%, I can set a marginal increase. Okay, what if we had about 120 students in 2022. Now let's project for 150 students. Where can I get those extra 30 students? For the number of students that we had in 2022, we had a corresponding income. If I were to increase it to 150, what is the corresponding income? And where would I get those from? By looking at my figures, by looking at my pattern. Okay, very, very crucial that you have that understanding. But you cannot set goals without relations to performances. So it's critical that in setting your 2023 goals, let's be relative to how you have performed in 2022. And that will form the basis of your strategy by looking at your pricing, by looking at your numbers, looking at the frequency. How frequent do you do it? We do quarterly training of 12 weeks over and then 4 trainings in a year. And I'm thinking, can I reduce that to 8 weeks and do more frequency? So you can change your frequency. The numbers may reduce, but you can change your frequency. In changing your frequency, so we have a frequency of 4 training a year. If I change that to 6 and I increase the intake per class, I would increase our revenue. So that's a strategy. You got to be strategic in the way you think if you're going to increase your relative income by the end of 2023. Moving on quickly. This is a breakdown. These are just figures. I'm not going to tell you my income. These are just figures. But it gives you an insight into what we do in terms of the fee numbers, the income, the expenditure, and the errors and the profits. There are some products here that have zero expenditure. Next to nothing expenditure. So when you look at it relatively, we do better. Events is number 2, as you can see here. But at the end of the year, the profit on our event is minus $2,300, as it were. But on consulting, which you don't do as much, I mean, even the revenue. So don't look at your revenues. Look at your relative profits to set your targets, to set your goals. Because your relative profit is the difference between your gross income and your expenditure. And in these cases, in these two cases, we have very little expenditure on these products, even though in terms of the revenue hands, they have little revenue. So don't look at the revenue and look at the profits. Well, of course, with your revenue hand. Don't look at the total end before you look at your what your earnings are. Take away your expenditure from your income, and then you get a true reflection of your revenue earnings, and that can form the basis of essentially why and where you can increase your income. Our franchising, we came out of the year with arrears of close to $6,000. So I'm asking ourselves, how did you come out? Why did you come out into these arrears at the end of 2022? So, and that's why you see it in red. And I've got to put in measures in place to ensure that we reduce arrears going forward into 2023. And this is how your figures can help you. You see your figures in real time, and it can help you to identify where adjustments and improvements can be made in your business. So we've looked at the purpose. This is where we are going. And then beyond the purpose, beyond defining the purpose, the next critical question you got to be asking yourself is, what problems or what problem are you solving? What problems are you solving now in 2023? What additional problems do you seek to solve in 2023? What are the needs you are meeting? So in talking about problems, you're asking yourself, what needs do my clients have? What problems are we solving? What needs are we meeting? What new needs are we meeting? What new problems have we identified? At this point, I'd like to talk about customer loyalty. Listen, your customer's loyalty is a function of you being able to meet their needs. As long as you can meet the needs of your customers will be loyal. How do you meet the needs of your customer? By looking at what are their desires, what are their needs, what are their aspirations. Somebody call it your customer's DNA. What are their desires? What are their needs? What are their aspirations? So you are constantly ahead of your customer. I regret to say this, many consultants are lagging behind the needs of their customers. So your customers are outgrowing you. And when your customers outgrow you, forget about loyalty. They'll move on to the next person who can meet their needs. So don't question your client's loyalty if they leave you and move on. It is simply because you have not been able to meet their needs. You're not coming up with products that are relevant to their business needs. And guess what? No matter how far, how well you've come, for your clients, their priority is their needs is their number one priority. So you got to work with your clients to ask questions with your clients. What are your needs? As a matter of fact, one of the things I do is at the beginning of the year, I sit down with my clients and say, what are your strategic objectives for 2023? What are your strategic objectives for this year? And why do I do that? So that I can understand what their pain point is. I can understand the customer's journey or what they want to achieve in the new year. And then I can project and fix myself to how I can be relevant or how I can help them in that journey in 2023. So you got to find out from your customer. You got to identify your customer's pain points. What are their needs? What are the new support they need? Okay, what new solutions can you bring to the market? If you don't bring new solutions to the market, your customers or your clients will move on to anyone that can meet their need. Then you ask yourself, having identified the solution, do I have the capacity to solve this problem? Do I have the capacity as a company to meet this need? If I don't have the capacity, go into partnership. Talk to somebody else who has the capacity. Okay, never let that opportunity go. Okay, never let that up. Have you met clients who have a need? You introduce them to a colleague, and guess what? They never come back to you. They prefer the colleague, or the colleague has the capacity to grow with them. Okay, so be careful. I mean, it's not for today. What is your agreement, non-compete agreement, when you go down this route of introducing partners into your business or helping partners to solve clients' business problems? And then finally, what is the size of the markets that you're dealing with? What is the size of the problem? Now, the size of the problem will determine the size of the market, and the size of the market determines the potentials, the revenue potentials. How big is the problem? How many people are experiencing this problem? How much are they prepared to pay for you to solve this problem? These are critical questions you got to ask yourself and set yourself early in the year as we go into year 2000, or as we go into year 2003. So we talked about purpose, where are you going? We talked about what problems are you solving. Then number 3, what questions are you asking? What questions are you asking? So you know the purpose. This is where we're going. Okay? You know the problem that you want to solve, but what answers are you seeking? These are the solutions. What questions? You got to ask questions before you get solutions. And so what solutions are you bringing to the table to solve the problem? What products do you have or intend to introduce to solve the problem? And so there's a lot of product development that you need to think about. You must have that mind of product development. Never stick with one product. One of the key things I really treasure the School of Consulting that we try and imbibe in our participants is don't rely on one product. A single product is not sustainable. A single product as a market strategy is not sustainable. In most cases, if you're going to hold on to a single product, I'm not saying a single service, you could offer a single service but have several products. If you do that, your clients might easily outgrow you. I'll give an example. Now, as a school, I mean, if you can see the chart on the right here, we started off with learning, providing learning, consulting learning. That's what we started off in 2019. That's what we started off with. Increasingly, we realized that the same people that we have trained were demanding certification. So beyond learning, they wanted certification. They could go elsewhere. But what do? We provide certification as well now. So what do? We keep our clients. We continuously offer value to the same clients. So it's a one-stop shop. So you come to School of Consulting, you get your training in consulting, you get your certification in consulting. We can help you source for job. We create platforms for networking. We have conferences, there's mentoring, and then guess what? We have franchising and even consulting itself. So we have 8 different products that we can offer. But guess what? We didn't arrive there one day. So these are solutions that we have created incrementally to be relevant to our clients. Very critical. So over time, I'm encouraging you products. So for 2023, what problems have you identified? What needs do your clients have? And what new solutions are you bringing to your clients for 2023? That's part of how to grow. Okay, if it's a growth strategy that you are seeking, you've got to increase the products that you place in front of your clients. You've got to find out what their problems are, what are their aspirations, what are the problems, what can you add to them? What value add can you bring to them by solving their problems? Number 4, positioning. So having identified where you're going, having identified what the problem is, having come up with a product, you need to be rightly positioned. You need to be rightly positioned. Beyond those that know you, those that don't know you, can they find you in the marketplace? Are you synonymous with the product you're selling? I want to be synonymous with consulting training. Anybody goes on Google or does a search, I want to be around the top 3 globally when it comes to consulting training. That is positioning. Are you well positioned? Can we find you? One of my colleagues says, put this excellently. Are you digitally compliant? He says, are you digitally compliant? Can we find you? And I stretch that a bit. Beyond being digitally compliant, are you findable? Can we find you online? Beyond finding you online, do you have enough content for us to like your content? Are you stickable? Oh, do people want more when it comes to your content? And much more, are you shareable? Can people share your content? Listen, by the time you get to that point, you have positioned yourself. And look at what we have here, the graph that we have. You must be in the winning zone. You must have what the customer wants. What is the brand that is recognized with your industry? Are you synonymous with your industry? When you are synonymous with your industry, you have been well positioned. So I want to challenge you. You got to position yourself in 2023. You see, you are limited by only people knowing you who buy from you. There's a lot bigger market out there of people who don't know you, who can buy from you. But that comes by position. How are you positioned? Are your customers or potential customers aware of you? If the only people that know you are those that are aware of you, your business will not grow. Your business is limited. Your business will be driven by those who make a search for your service and then they find you. They make a search for your service and they find you, you have a high growth potentials. So how digitally compliant are you? Listen, the website, the internet today is akin to your old-time business card. It's similar to your old-time business card. Remember you mention your name or somebody mentions you, the next thing people do is they search you online. Are you findable? Can we find you online? Oh, even though we can find you online, does your content relate to what you are selling? Very critical. Let there be no disconnect. There's no point in finding you online and then you're not positioned. It's not talking about what you're selling. Let there be that synergy. You're found online, and then what you are selling, we can find it online as well. Okay. How would you place the product in the market? How would your product come into the market? What awareness would you want to create for your product? These are critical entry points, that entry things you must do. What is your product differentiator? What differentiates your product? Your product must have a differentiator. What is it? Differentiator in the sense that what stands you apart from your nearest competition? Why should people buy from you? These are questions you must ask in the new year. What channels would you use, and what is your market entry strategy? These are critical things you need to have to position yourself. Then the next one is pricing. What is the value you create? One major point I'm going to say here before I move on is the fact that if a product has no value, it doesn't matter the price you place on it. I repeat, if a product has no value, if the product is not adding to me, even if it's free, I may not buy it. So let your pricing be driven by the value you create. Let your pricing be driven by the value you create. People buy value. They buy value. They buy value. Why do I buy a drink? I am buying a drink because I'm thirsty. I want to quench my thirst. But what drink is in front of me? Oh, the popular brands are in front of me, but they satisfy the same value. Coca-Cola never sells drink, they sell refreshment. They sell the value they create is refreshment. So what are you selling? What value are you selling, and at what price? At what price would a product be accepted in the market? And remember this, if the product does not have a value, forget about the price. So people are driven by value, not necessarily price. So we have everything in place, now we can plan. And in planning, there are some key things I want to point out. Number one, how high do you have product? How high is your product barrier? How high is your product? How easy is it for others to come into your space? How easy is it for others to come into your space? These are critical questions in terms of your product barrier. It might affect your planning. It might adjust your variables in terms of access to what you're doing. How low is it for somebody to come into your business? So everything you're planning as a variable is a function of others. The higher the barrier, the less variables that you have that are in your control. If the variables are out of your control, there's very little you can do. So your planning is influenced by third party. If the variables, for instance, barriers of entry to what you're doing is easy, many other people can do what you're doing. It affects your pricing. It affects your projection. And that's the honest truth. You cannot charge beyond what the market is willing to accept. You can't do that. Okay. In your planning, have you defined the end-to-end process? What is the customer journey like? What is the customer journey like? The part that people will go through in buying from you. At what's the percentage of those who come into you in your customer journey? In fact, what's your touch points like? What is the experience in the touch point? It has been reported that the more negative experience people have in their touch point. What are touch points? Touch points are in that process of buying from you. What is their experience? People go through a certain process before they actually call you to buy from you. But before they get to that point of calling to buy from you, what is their experience at different points of touch? It's called the touch points. Is the experience good? Is it positive? Is it negative? The more negative their experience is in their customer journey, the less likely to buy from you. So what are your touch points, and what are the experiences people go through when they come into those touch points? What are touch points? Our websites are touch points. How your phone is answered in the business are touch points. How you respond to customer issues are touch points. I mean, even though customer issues could arise before and after, your website are touch points, that people interact with. Your footprints, your digital footprint are touch points. Are your touch points giving me the right vibes or negative vibes? If I get more of negative vibes, I may not call you to buy from you. So what are those touch points? In your planning, what are your metrics? What are the figures? We intend to increase price by 5% in this particular product. We reduce it by 2%. We want to increase the margin of errors. We want to reduce wastages. We want to reduce repetition. We want to increase the speed of delivery. We want to reduce the number of shift from 4 training. We want to turn it to 6 training in a year, and then see the marginal index differences. These are your metrics. These are your timelines. And then you also have critical success. What are your critical success factors? Without this in place, would you be able to achieve your goals? Would you be able to achieve your goals? And then finally, are your projections. Finally, are your projections. Sorry, I do apologize. I'm repeating this. Your projections are based on 4 things. What are your sales forecasts? You got to have sales forecast at the beginning of the year. How many units can you sell? How many units did you sell in 2022? How many units did you sell in 2021? Look at your historicals. And then you can see a pattern. And on that pattern, you can predict. You can make a judgment on your projections based on your pattern. So project your sales for 2023. For 2023 or even beyond. We're talking about 2023. How much revenues do you want to make? And from where can you make those revenues? Don't make those projections in isolation. Make them relative to your earnings in 2022. And then your expenses. As I mentioned earlier, what are your forecasts in terms of expenses? Now, if your product line increases, your expenses would increase. Let me break it down. The fact that you're making an extra, say maybe you made $20,000 in 2022, and then in 2023 you maybe make $30,000. Listen, your profit, your differentials is not $10,000. What is the cost of making that $10,000? Okay, what is the cost of making that extra $10,000? Because if you increase your product, you'll have spent more. So relatively, even though you're making $30,000 in 2023, the fact of the matter is you might have been worse off because your expenditure has actually gone up to make that $30,000. So as you forecast your sales, also remember to carry out forecast on your expenditure. If your expenditure is going to grow, especially due to other products, it would affect your expenses. So don't just look at the outcomes. Oh, I made $30,000 this year and you're excited. Oh, I made $20,000 last year. You are excited. What's the cost of producing that $30,000? It may well be higher than the cost of producing the $20,000. So always factor in your expense your expense as well. Now, there's what we call the top-down focus, which is you look at the whole market as the whole outlook of the market. Take the market outlook as a whole to project future estimates of the company. Don't look at yourself. Look at yourself again relative to the market, relative to the competition. Okay, what's competition doing? Are they bringing in new products? Okay, or perhaps you don't even have competition, but never do it in isolation. Don't do it in isolation. Do it relative to your earnings, and then the top-down forecasting of your projection is relative to your market. What is your competition doing? What is the size of the market? What new products are on the market? What is the average sales in the market? What is the average price people are willing to pay for products in the market? Okay. Then finally, what I call your bottom-up forecast. Look at your old historicals and then predict what the markets would allow. Look at what you have done over the last 3 years. I look at what we have done in the School of Consulting over the last 3 years, and we have evolved with several products, as you can see. And I'm looking at what does the market have the capacity to sustain this, so you don't you're not overcapacitated in your market as it were. You just have enough product for your market to sustain your market. And that's how you're going to basically have a market to yourself that you are servicing. So please, in summary, I'm just going to go over the 7 things I want you to look at as you project for 2023. What do you want to achieve? What are your goals? What are your purpose? Where are you going? How do you want the end of 2023 to be like? Let it be relative to where you are now. Let it be relative to your historicals. Break down where you're making revenues. Look at where you have the greatest margins. Look at where you have the greatest expenditure and profit. Look at all of that. Don't simply look at it that, oh, we're earning so much here. How much does it cost you to produce what you're earning there? Okay, so don't just be deceived about the relative figures or percentages. Okay, like as I mentioned to you, there are some products that we have that has zero or no costs. The truth of the matter is they're probably making more profit than other products that that we've come out short of in year 2022. Your strategy, what is your approach? Again, look at your pricing, look at your numbers, look at the frequency of what you are doing. Can you increase the frequency? Can you increase this? It is those individual increments in everything you do that you will aggregate to come up with your margin, your focus margin for the year. Don't just take figures in isolation. Break it down, use your figures, use your historicals, look at your performances. It will help you to project much more carefully. And once you project in your plan, you have metrics that you measure. You measure it time by time. Number 3 is the problem. What problem are you solving? Or what problems are you solving? Seek to increase the problems you are solving. The loyalty of your client is a function of how relevant you are to them. And so in solving problems, the solutions are the products. Okay, we talk about purpose, we talked about problems, we talk about products. Okay, the solutions are the products. How do you bring in new products to the market? What is the product doing for your clients? Would your clients rather stay with you? Would you rather your clients stay with you or go to someone else that has a product that solves their problem? I would rather have a product that keeps my clients in front of me. I would rather have products that makes me relevant or keeps me relevant in front of everybody that comes to the School of Consulting. If I don't do it, somebody else will do it. And they will go looking for those solutions. So you got to be solution-minded. Positioning, very critical. In 2023, you got to position yourself. How easy can we find you? How easy can you be found? And it's a lot easier nowadays with social media. But are you findable? Are you shareable? And what content do you have? What problems are you solving? Are you relative to your products? Are you synonymous with your products? Like I say this, I may not be the best consultant, but I want to be synonymous with consulting education. That is positioning. What is your positioning strategy? What is your differentiator? What differentiates you? And then pricing. What is the value you are creating? If a product has no value, I probably won't buy it because it has no value, even if it's at zero price. So it's not about pricing, it's about value. It's about the value I derive from that product that determines the price I am willing to pay for it. So my question is, at what price would your market accept your product? Think about it. Planning, you have all the variables. Now you can plan. You can put things together. You can do your projections. You can do your baseline. You can do your risk. You can do so many things. You can do your projects. You can do your financials. And then you have a dashboard that you can monitor. Monitor your dashboard like a Nugu. Oh, our estimation is that would make this much revenue in January. Now, how far are we off? If you are far off those revenue in January, what adjustments can you make to catch up in February? Likewise, in April, in May. You don't want to have a situation whereby you come back 3 months, 5 months, 6 months down the line, you are way off your targets. Once you are that way off your target by 5, 6 months down the line, there's no way you're going to hit your goals before the end of the year. So watch over it like a nigga. Watch your predictions, your projections on a monthly basis. And I mean, maybe when I say on a monthly basis, you're practically doing it every day, every week. You're watching it and you're making adjustments because there are forecasts. And so forecasts are like budgets. Oh, this is what we intend to spend. This is what we hope to come in. And so in real time, you got to look at it. This is our forecast. What is actually coming in? And if your forecast is too rich or is too ambitious, then you can adjust it. And then there are things you can put in place to ensure that you meet up. If you are not meeting up with your forecast this week or the following week. So it's critical. Once you can have that degree of discipline to watch over your forecast on a regular basis, almost on a week-to-week, day-to-day basis, you're likely to achieve your goals. Okay? And then finally, your projections. What are your projections? What are your sales projections? What are your expense forecasts? Don't just look at what is coming in. Look at what is going out and try to reduce what is going out. Try and reduce your expenditure. That's how to increase your profits on 2 levels. Increase your profit by the margins of what you sell, and increase your profit by reducing your cost of production. Okay. Also look at your top-down forecast. What is the market outlook? What is the market willing to take? What more can you bring to the market? Your market is where you sell to. Okay. What are people looking for? What are the new products that people are looking for? Okay, so you can use as an estimate. Oh, we want to do a few things. For instance, we're realizing that there's a demand for mentoring in our space. So we've got to create access for mentoring in our space. Increasing when we're noticing that there's demand for consulting jobs in our space. That's the market outlook. So in understanding that market outlook, I cannot sit back. I've got to create access or opportunities for consultants to find jobs in our space. If I don't do it, somebody else will do it. Increasingly, we're talking about collaboration. How do we create a platform for collaboration? If we don't do it, somebody else won't do it. Listen, I'm not saying you do everything. All I'm simply trying to say is have products that satisfies the need of your client. That is how to grow. That's how to grow your business, which is your objective for 2023. And on that basis, you can make forecasts. You can make forecasts. If I have 10 clients who have mentored this year, if I increase it by just 2 more clients, what marginal differences would that make in my bottom line, in my outcomes for 2023? All right. So on this note, I want to thank you very much for listening in to this. Remember the 7 things: your purpose. What do you want to achieve in 2023? What problem do you want to solve in 2023? What questions are you asking? Those questions will lead to solutions. Those solutions are the products. And then how are you positioned? So you have a fantastic product, but nobody has ever heard about you. There's no way people can access you. The only people that know about you are your existing customers. That will limit your growth potentials. You must be findable. You must be digitally available, and you must be findable, likable, and shareable in the most basic form I can put it. Your pricing, remember, it's about value. Even if this pen were free, if it's offering no value, nobody will pay for it. People pay for value. What is the value that you are bringing to your clients? Always think value. What value are you bringing to your client? What set of values can you bring to your clients in 2023? That's the question to ask. And then once you have all those variables in place, where you have your numbers, and then you can begin to plan. And after you have planned, what you need to do is sit back with your projections and study the figures. Look at the figures. If there are changes that need to be make those changes early. Don't wait until November to realize that there's no way you can. I mean, by then it's too late to achieve your targets, to make changes to achieve your targets by December. All right. So that's my presentation on business essentials for 2023, the 7 P's. Thank you very much. I'm happy to get feedbacks. And if you want to know more feedback, if you want to know more about the School of Consulting, please go to www.schoolofconsulting.com. Schoolofconsulting.com. One word, www.schoolofconsulting.com. Thank you very much. Thank you for your time. And we hope to, I hope our paths will cross in the near future. Thank you very much. My name is Shola Ajani, schoolofconsulting.com, signing out.